James Brown from Barwon Investment Partners. Welcome to the Alternative Symposium.
Thanks for having me, Drew.
Can you explain Barwon's unique private equity strategy for me, please?
Sure. Our strategy and our fund, the Barwon Global Listed Private Equity Fund, we seek to provide investors with private equity returns from an exposure to global private equity assets, but providing daily liquidity. And we do that by investing in listed private equity securities.
And what sort of role do you see this strategy playing within a balanced portfolio?
Good question. Typically, we see clients using this as a growth alternative because ultimately, being private equity assets, we're looking for growth from this portfolio. We see some clients use it as a complement to a traditional private equity portfolio where they might have unlisted private assets alongside, and this works as a liquid sleeve. We have other clients who are liquidity constrained and who need daily liquidity, and this fund might represent their entire private equity exposure. And finally, because there is an element of equity market correlation, we have some clients who simply see it as a niche global equity strategy, which gives exposure to a different set of drivers of returns.
And what are the broad sub-asset classes within the strategy?
Sure. So listed private equity is probably a larger universe than a lot of people imagine. Over 700 stocks, nearly $3 trillion of market cap. We break the sector down into four subcategories or four subsectors. The first and the core really is the listed buyout vehicles. Now these are listed vehicles which hold a portfolio of private equity assets. So either directly in a holding company structure or perhaps in a listed investment company type structure where the listed entity simply gets a sleeve or a slice of every private equity deal managed by a private equity manager. The second part of the portfolio in our investment universe is listed private equity backed companies. Now these are simply public companies, but where a private equity sponsor owns a substantial and ideally controlling stake in the company. So for us, this is a bit like a co-investment. We can buy the stock on the public market, but ultimately it's the private equity sponsor's involvement in the business that is going to drive value, and we can invest alongside them for that journey. Now, moving up the capital structure, we also invest in listed private debt funds. Now, these provide a nice running yield of 7 to 10%, but can also be quite an inefficient market, meaning we can generate further returns through either a discount capture strategy or where we see opportunities for these vehicles to grow their book of assets. And finally, and in some ways rounding out the private equity universe or ecosystem as we see it, we've got the listed alternative asset managers. So this is an opportunity for us and for our investors to benefit in the fee generation of these private equity managers. So really we're talking about the large global listed platforms, the likes of the Blackstones, KKRs and Apollos of the world, where we can participate in a share of their management fee earnings, a share of their performance fee or carried interest, and then also a share of the balance sheet which they might hold alongside.
Can you provide an example of an underlying investment of the fund?
Sure. I'll use a listed buyout vehicle as an example, and a good example there is Oakley Capital Investors, a London-listed investment company. Now, Oakley Capital Investors, the listed stock, its portfolio is a portfolio of private equity assets which are managed by Oakley Capital Partners, which is a London-based private equity firm which specialises in European small and mid-market buyouts, but really with a focus on backing entrepreneurs and entrepreneur-led businesses. And so the entire portfolio of the listed company is a mix of Oakley-managed funds and direct investments.
James Brown, thank you.
Thanks.